Time now for Phil's Gang Market Watch with Phil Grande.
Hi, I'm Phil Grande at philsgang.com, syndicated radio program. I want to share with you some of my frustration that I keep hearing from these people on CNBC, especially this little fat guy by the name of Steve Liesman, spelled Liesman, which is appropriate. He's an economist. They bill him as CNBC economist, but he's not an economist. He majored in English. And the stuff he says is just outrageous. But one of the biggest lies is there's a lot of cash. You're going to keep hearing how there's good cash. Corporations have great balance sheets with great cash. And you'll hear it.
We have so much extra cash and reserves sitting on the sidelines. It's not being put to work right now. The question is, what will incent people to use the copious amounts of money we put out there and step on the accelerator and move job creation forward?
This is Fisher, the Fed, Dallas Fed chairman. It's not true. He doesn't know what he's talking about. If he's that dumb, okay, that's very dangerous. If he's lying, I'd rather have him be lying than think that we got a Fed guy that dumb. Because that cash that he talks about, and many others talk about, that are on these balance sheets of these corporations, is bogus. There's 2,000 U.S. global corporations. These 2,000 corporations, the largest corporations, they have cash, absolutely. They have 11 trillion in cash, but it's borrowed. The cash came from the Federal Reserve. They went out and borrowed all of this cash at near 0% rate. It's all debt. They don't tell you that. They just say, oh, look, balance sheets are looking good. They got all kinds of cash. No, it's debt. The only cash they have, if you take the aggregate 2,000 U.S. corporations, they have about $4 trillion in real cash from earnings. But that cash is sitting in accounts in Europe that are sheltered, so they're not paying tax. And what they're doing with that $4 trillion is they're waiting, because the 11 trillion that they borrowed, that they keep saying they got all this cash, that 4 trillion, they're holding it back. So if interest rates go up, they're going to use that 4 trillion to offset that interest. This creates a big problem. The Fed is participating and creating the slow recovery, because that 4 trillion that's sitting and being hoarded, they should be taking that money and buying new equipment, information technology. They should be adding onto their facilities, building new facilities, training programs, on and on and on, and that's how you create jobs. But the corporations aren't doing it. They're taking the money for one reason, to raise their stock price by buying back the corporate stock. Now this is stupid. The reason they're buying their corporation stock back is to raise the price of the stock so they can exercise their options. If they really were following through and with their fiduciary relationship they have with CEOs, they wouldn't have done that. They would have bought the stocks when they were 50% lower. But they are buying the stocks when it's higher to push up the stock price to an all-time high so they can exercise their options. They shall be fired. So let's not believe when you hear the balance sheets are getting better. No, the balance sheets are getting worse. In fact, the balance sheets of these 2,000 companies in aggregate, their debt is far exceeding their cash assets. It's all bogus. It's all a lie. So when you're hearing this and you think, wow, things are getting better, no, they're not getting better. People don't have money to spend. So corporations, when you see their stock go up, it's not going up because people are spending. People are cutting their spending because most people have part-time jobs. They have low-paying jobs. So once again, do not listen to these people on CNBC. The other one that really grinds my gears is the one that the weather. They blame the weather for the first quarter negative 2.9% GDP.
Superimposed on this, you've got insane weather.
Economic activity was temporarily restrained by weather-related disruptions.
Now, the market's concerned right now, and has been concerned for the last couple of months, because of this bad winter, the bad first quarter GDP.
The cold weather is going to play a factor in the Friday numbers.
And I hope that's because of the weather.
Part of that softness may reflect adverse weather conditions.
Everybody knows Q1 was weak. They know that weakness was exacerbated by the weather.
All right, here's the truth about the weather. When they first came out with the story about the weather, it wasn't like the economy, the GDP was at 3, 4, 5%, and then all of a sudden we hit a bad weather, and then the GDP went down to 2.9. Remember, our economic GDP growth was always struggling to get to 2%. We're always between 1 and 2%. This weather is a bunch of nonsense. It's like my dog eating my homework. So they thought they could get away with it. Well, here's the problem now. Now it's coming home to roost because we are now in our second quarter. And Walmart and other big discount companies, the CEOs have come out and said they're worried that April and May so far is showing not good news. They're tracking the same as they were tracking during those winter months. So they said, hey, what's going on here? If this was the truth, that the first quarter was negative 2.9% GDP growth, it was the weather, well, we should have a huge surge in the second quarter. There's no surge. The same amount of foot traffic they're having now in the second quarter as the first quarter. In fact, they're really alarmed because they're seeing the spending going down. So this is not weather related, it's poor job related. It's all about jobs. When you don't have high paying jobs, you don't have savings. And here's another problem. People used to go out and freely use their credit card, but a lot of people aren't using their credit card anymore because they're so much in debt that they're going, hey, I'm not even going to use my credit card. So the two biggest lies, that there's a lot, the corporation balance sheets are getting better and they're full of cash, one lie. Yeah, they're not full of cash. Yeah, they are. It's borrowed. The weather, no. Look, let's wait till the second quarter. When the second quarter comes in, if it's negative like the first quarter, that means we're back into a recession. Remember that. It's two back-to-back quarters that are negatives put us in a recession. The best they can do is be flat for the half year. If they reach 3%, I doubt they're going to reach that. So the two biggest lies that we're hearing from CNBC and the financial community, that is the weather that caused the bad first quarter, and the second quarter is going to be booming. We're not seeing that come about. And the cash is, we're seeing the cash is again, it's all debt. And when they say the stocks are cheap, that's a lie too. If the S&P is trading at 15.6%, we say, cheap is when they're trading at 10.6, not 15.6. That's all bogus. That's a lie. All right. So now that you know the truth, that means that you can invest smartly. And that's why people join the gang, philsgang.com. See you on the charts.
For more information on Phil's Gang, please go to philsgang.com or give him a call at 877-600-GANG. That's 877-600-4264.